looking over at Vol. So after a quiet Easter holiday trading week, BTC realized 10-day realized got down to 31. It's about as low as it really gets. We've finally seen spot trade up to 30k overnight, but in surprisingly calm fashion, right? So it hasn't really smashed through there yet. So 29 to 30k was kind of that zone of resistance, and it's being tested as we speak. Ethereum realized has also been drifting lower, not quite as low as BTC, more in the mid 30s. But we haven't really seen the Shanghai related excitement. We haven't really seen that upside be particularly violent either. In fact, it's been underwhelming, I would say, compared to BTC. Implied vols did bottom out though at the weekend. So whilst they kind of led into the weekend with Good Friday, etc., we have seen them bottom out here, both in ETH and Bitcoin. That was even before the spot move really started going. So you've got quite a lot of positive carry there in nearly 30 vols of positive carry across the two assets. That's about as juicy as it gets, right? That's in 90 plus percentile levels, basically making selling crypto gamma look very attractive right now. Now, clearly the market is expecting a move. I also kind of agree with that point that it's unlikely that we're just going to sit at 30k and do nothing. We're either going to break and go to 32 to 33k, or we're going to reject and come straight back down to 28, right? That's probably what's going to happen. And the bid that Gamma has got going into the CPI is pretty much confirming that the market agrees that this is not a level of equilibrium where the market's just going to sit. Okay. Now we do know that as we go into every weekend, though, we do tend to see some more selling, and we've had an influx of call buying on this latest pop. So those call buyers might throw in the towel if the CPI number doesn't really suit them. So we are at this point where the vol is susceptible to getting whacked, but right here, right now, it's not a clear sell to be selling Gamma, even with that positive carry number that's showing up, basically. And then just one last thing as well on the spot. I do probably favor that this thing gets faded from here and doesn't just break straight high. We are seeing bearish momentum divergence on the longer term time frames on BTC. We're also seeing that dominance bumping up against very sort of longer term resistance. So my bias is probably for rejection from here. Who knows if I'll be right, but that's my kind of gut feel there. Okay. If we look at term structure, both term structures have inverted. Tends to happen when we break to new highs. So you can see BTC front end is higher, as is ETH. The vol spread also inverted. So you can see the front end has popped. So the front end spread is getting closer to 5 vols, but the back end spread has actually moved down. So the back end spread's back at 0. So that's September stuff. That type of June, September is back at 0 vols, the spread. And just because the realized on the 30-day is actually BTC over, whereas on the very short dated on the 10-day, it's ETH over. So you've got the ETH front end reflecting the fact that Shanghai upgrade is this week. We might get a big move, so they've attached some premium to that. But the rest of the curve is saying, well, whatever the Shanghai move is, BTC has now established itself as the dominant driver in crypto. We think that's going to move more, and we don't want to pay up a premium for Ethereum vol. So until Ethereum vol can reassert itself and Ethereum can show that it knows how to move independently of Bitcoin and start doing what it has done for years, then for now, no one really wants Ethereum vol. And that seems to be where we're at. Yeah. No material shifting Gamma on the break higher, which has kept the rally quite orderly. Although above 2,000, we do think ETH, the picture may look different. We have seen April call buying up there, and that might start to fuel a squeeze if it does pop its head above 2,000. But like I say, it remains to be seen. Looking at SKEW, should be no surprise that SKEW has flipped over to calls again. So led by the front end as we broke 30k. We're at 5 vols for calls now in BTC. That goes down to about 2 vols as you go out the curve. Ethereum has also got a bid for calls. It did flip from put premium in the last day or so. Short dated has had the biggest move. It's gone from -5 to +2 or 3 for calls. The shift to call premium shows obviously that the positioning setup is changing as well, where dealers are less long upside than they were, which is why that call SKEW has now caught more of a bid. The positive spot vol correlation in crypto remains in place. As we continue to see new highs in spot, that induces more call buying. That means vol catches a bid, right? And just the same thing, if those new highs get rejected and we fall back into the range, then there's no reason to own vol, and people puke those calls, and you'll see vol naturally come back down. So that dynamic is likely to stay in place unless we get a really dramatic sell-off in the order of sort of 20% lower, where people start bidding for puts again, and we haven't really seen that yet. If CPI does trigger a fade back down in spot due to hot inflation data and a hawkish rates market reaction, we do expect calls to get offloaded. And so we do think short vol, short delta structures do look interesting here, because there is that catalyst that there will be flow that pushes it that way, as well as just the natural fact that markets go back into the range and realize should probably stay benign, right? So if you've got the bullets to sell calls, that's the obvious trade, really, selling calls, I would say, on BTC, given how stretched it is. But even sort of put ratio, put fly type structures that are short delta, short vol can also make sense, given that setup, I would say. Okay, dashboard, on the dashboards, you've got BTC kind of up here on the like miles off to the right, basically showing you how stretched spot is. But that's really just the function of the fact that the Bollinger Bands were contracting as realized vol was coming down, and then we've suddenly got a move, right? So probably flattered a little bit, I would say. But the big one is that vol carry in the 95th percentile that we were talking about. And it's a similar kind of story if you look over at the ETH dashboard. Now, if we go to flows, option volumes did drop off last week, as you'd expect with the holiday. But we have seen flows come in yesterday as spot took out 30K, mainly call buyers again, as you'd expect. So if we look at the main hotspots, 14th of April, we've seen the 29 to 30K area getting bought, which are these pink lines. Then in regular April, which is the purple, we've got the 31K to 34K area being bought outright as well. And then in May, in the dark blue, we've got 38K calls getting bought in a decent clip. So those are all your outright call buyers in terms of the blocks. We've also seen some calendar selling. So people buying April 32K calls and funding them via selling May 42K calls. So it's a diagonal calendar call spread. And what they're essentially doing there is they are buying Delta and Gamma to play the break, but they don't want to buy a load of Vega because BTC vol is a little bit pumped now. So they're selling out the longer dated upside to get some Vega out the door. So if vols shift back down, then they're protected. So that's the sort of rationale behind that structure. And then lastly, saw some action on the downside as well. Not massive, but quite a big clip of April 26K puts getting bought as a hedge, probably for CPI. Yeah. Okay. Moving on to the ETH flow. We see a bit more stable in terms of volume. Obviously, you've got the Shanghai upgrade this week, and ETH volumes are more in the sort of 2 billion notional type number. It's been more stable. Primarily call buying interest, similar to what we saw in BTC, but traders are more comfortable probably buying outright calls in Ethereum instead of spreads, and that's largely because Ethereum vols are cheaper than normal. So you think by buying Ethereum vol, there's probably less downside in the implied vol going down or resetting materially lower. So you're more comfortable owning that outright vol. So we saw the 2,000 to 2,200 strikes in April being pretty active. Some people rolling strikes up as well from like 1,800 and things like that. And then the big outright clips in May with the 2,500 and the 3,200 in terms of outright calls. And then there was some limited put buying as well mainly concentrated in the 1,700, 1,600 area that we saw there. Yeah. And then your usual kind of little bit of local gamma selling that you always get in Ethereum. Okay. So that's kind of what we're seeing in terms of the flows. If we look at the dealer positioning, so we have seen BTC flip negative again from being neutral last week. So down here. Now, it's not massively negative. We've seen it a lot more negative in sort of previous weeks. But you can see there's a fair amount of short positioning between, say, 29K and 32K across the kind of front expiries. And that's really what's driving the short there. So, It hasn't been as explosive a move because we do have some long positioning higher up, and it has been call spread buying a lot of the stuff as you know, spot did get higher, started to reach those targets, and vol got more expensive. People started to opt for call spreads rather than outrights, so that's kind of helped. We, like I said, we do suspect supply to come back after CPI. Really, whatever happens, just because people are more comfortable selling gamma after the event. So then some of this short positioning might get given back to dealers, and they'll move more towards flat as we approach the end of the week. ETH positioning has stayed more neutral, but if we look at it, you've got this big long coming on the 18, and then you've got quite a lot of shorts above 2,000. So we do think the dealer positioning is quite skewed right now in Ethereum. So if we were able to get some momentum above 2,000, we do think dealers flip short. And a lot of this is purple bars, which is April, which has got the most gamma because there has been April call buying. So that might give you the impetus for a squeeze in Ethereum, but spot needs to do the work and actually break through 2,000, right? And for now, it just can't seem to get going. So watch out for that. But the positioning setup is more there for a squeeze, I would say, than we've seen in recent weeks. So it is something to be aware of. And we have got the potential catalyst of Shanghai. So just something you want to kind of know about, basically. What have I been doing? Not a whole lot, to be honest. All right, that's it for today. Fairly short one. Thanks for listening. I'll catch you all next week. Cheers.